Good day everyone, my name is Gia Liza Badiang and today I'll be presenting the financial analysis of Jollibee Foods Corporation. The objectives of this analysis is to present informations and draw conclusions about Jollibee Foods Corporation, and for us to know whether this firm are able to make investment decisions or recommendations based on sound reasoning. And also, this can help investors thinking about investing in Jollibee Foods Corporation, and lastly, to analyze whether an entity is stable, solvent, liquid, or profitable enough to warrant a monetary investment. Before we will start, let us first go to its economic analysis, particularly on the international level and the national level. So the Jollibee Foods Corporation is affected by these three: the exchange rate, the COVID-19, and the inflation rate as well. As what you have seen here, in 2020, the average rate is 1 peso is equivalent to 0.0202 US dollar, and in 2021, the average rate is 1 peso is equivalent to 1.3757 US dollar. So comparing these 2 years, 2021 average rate is much higher than the 2020 exchange rate. The second one is the COVID-19. Now, of course, Jollibee Foods Corporation didn't operate during the year 2020 because of some health protocols and lockdown. And the third one is the inflation rate. In 2020, the average rate is 2.4, and in 2021, the average rate is 3.9. So in 2021, the average rate of inflation is much higher compared to 2020, which is not good. Presenting to you the balance sheet of Jollibee Foods Corporation for the year 2020 and 2021. And as well as the consolidated statements of comprehensive income or the income statement of Jollibee Foods Corporation for the year 2019, 2020, and 2021. So let us have first the comparative balance sheet and income statement between 2020 and 2021. So for the balance sheet, there is an increase in assets, decrease in liabilities, and increase in equity. For the income statement, there is an increase in revenue, increase in expenses, and there is a net loss in 2020 and net income in 2021. So without further ado, let us now go to the financial ratio analysis. So first, let us go to the liquidity ratio. So liquidity ratio is the firm's ability to pay off debts that are maturing within a year or within the next operating cycle. So in here, I am using the current ratio. So current ratio is equal to current assets over current liabilities. For the year 2020, the current assets of Jollibee Foods Corporation is 80,040,557 over current liabilities of 58,928,475. And this will be equivalent to 1.36 or 1.36 times. For the year 2021, the current assets is 35,328,067 pesos divided by 45,846,091 pesos, which will equal to 1.43 or 1.43 times. This means that in 2020 and in 2021, the company have enough liquid asset to cover its short-term liabilities. So next we have the leverage ratio to evaluate a company's debt levels. I am getting its debt ratio. So debt ratio is equal to total liabilities over total assets. For the year 2020, the total liabilities is 142,778,265 divided by its total assets of 210,810,130, which will equal to 0.68 or 68%. And for the year 2021, the total liabilities is 136,654,072 pesos divided by its total assets of 210,838,227 pesos, which is equal to 0.65 or 65%. So therefore, in 2020 and in 2021, it indicates that a company has more assets than debts. So next, let's go to the efficiency ratio. So this measures how well a company is utilizing its assets and resources. So I'm getting its days sales inventory or the DSI. So DSI is equivalent to inventory divided by cost of sales times the number of days in the period. For 2020, the inventory is 7,233,744 over cost of sales of 121,245,043 multiplied by 365, which is equal to 21.78 or 21.78 days. For the year 2021, the inventory is 9,355,321 divided by the cost of sales of 142,586,436 multiplied by 365, which is equal to 23.95 or 23.95 days. Therefore, in 2020, it takes approximately 22 days for the company to sell its stock of inventory, and 2021, it takes approximately 24 days for the company to sell its stock of inventory. So now let's go to the profitability ratio. So this measures a company's ability to generate income relative to revenue, balance sheet assets, operating costs, and equity. So I'm getting its gross margin ratio. Gross margin ratio is equal to total revenue minus cost of goods sold over or divided by the total revenue. So for the year 2020, the total revenue is 129,313,002 minus its cost of goods sold of 26,398,128 divided by its total revenue of 129,313,002, and this will be equal to 0.7958 or 79.58%. The year 2021, the total revenue is 153,575,590 minus the cost of goods sold of 19,804,298 divided it by the total revenue of 153,575,590, which is equal to 0.8710 or 87.10%. So therefore, in 2020, it means that for every peso generated, 0.2042 pesos would go into the cost of goods sold, while the remaining 0.7958 pesos could be used to pay back expenses, taxes, and so on. In 2021, it means that for every peso generated, 0.1290 pesos would go into the cost of goods sold, while the remaining 0.8710 pesos could be used to pay back expenses, taxes, and so on. The market value ratio, this what investors think about the firm and its future prospects. So I'm getting its price earnings ratio. So price earnings ratio is equal to share price over earnings per share. So in 2021, the price-earning ratio is equal to negative 20.8. And on the other hand, on 2021, the price-earnings ratio is 41.6. In 2020, with a PE ratio of negative 20.8, it means that the company has negative earnings or is losing money. In 2021, with a price-earnings ratio of 41.6, it means that the company's stock is trading 42 times higher than the company's earnings, or 42 times. But after analyzing its balance sheet, income statement, as well as the financial ratios, we can say or we can conclude that Jollibee Foods Corporation is good for investment. So that's all for my presentation for today. So what are you waiting for? Come and invest to our company.